Last week you said you wanted to go through the incorrect questions for assignment 2 and 3. I saw an email. I see you sent through answers for the assessments as well to check.
Yes. Yeah,
Okay.
yeah. Just so we don't have that same issue where we're
Okay.
trying to figure out what they did.
Okay. All right. So assessment number 2. I see you got the first one wrong. Question 1 was out of 2 marks. If we look at the required, let's see what they're asking for. Okay, those are adjustments. And then you've got information about the partnership. Lots of different points to consider. And then here's the question: which of the following alternative to be recorded on the face of the statement of profit and loss for the year ended? So if I'm looking at disclosure, I'm looking at profit and loss. They want to know what amount will be used to represent revenue, okay, on the face of the income statement. So if we go to the actual list of balances here, we need to look for anything relating to revenue. So, okay, we've got sales. That's one figure that we'll need. All right, the sales amount was 555,360. Okay, then they've given information about inventory. They've talked about a profit and sale of office furniture. And there's a question mark here, so that'll be asset disposal. You've got delivery expenses. Okay, we spoke about disclosure. So when looking at sales, just a little asterisk here, you can offset any sales returns. And also, Eunice's probably going to be taking off a discount. Okay, so if we're looking at sales, who do you sell to on credit?
Your debtors.
Correct. So discounts that arise with your debtors would be discounts that are allowed. So you can also less discounts allowed, okay, to show the actual sales that took place for that business. So you do have a settlement discount granted there. Discount grant or discount granted or discount allowed is the same thing. So 6744. 6744. Okay, is there anything else here? Purchases, delivery. Okay, there's sales returns, 8,400. Anything else? Purchase return, discounts received, rent, bank charges, depreciation, interest, salaries, telephone, maintenance, fuel. Okay, that doesn't look like there's anything else. Okay, then if we look at the additional information, the following amounts have not been provided for. Depreciation, you've got 2 vehicles. Office furniture, that's another vehicle actually. Okay, you've got vehicles and furniture, that's fine.
Yep.
All right, then you've got the partnership agreement, interest on capital, drawings and current accounts. Okay, current accounts, drawings. Okay, here's a note about the settlement discount. A total settlement discount of 1% on purchases for the year was received, because that's discount received. Okay,
Yep.
then you've got stationery and inventory. You've got a premium here for insurance. Those accounts are closed off, that's fine. And that's it. Okay, so yeah, looking at this, the answer would be the total after subtracting those 2 figures. So add and subtract. Okay, they're going with 540216 is correct.
Perfect. Yeah, I redid this one yesterday and I got that as well.
All right, 2 was correct, cool. 3 was incorrect. Okay, so 3 says, which of the following alternatives will be recorded on the face of the profit and loss relating to stationery? So this is an adjustment. Okay, this is a stationery on hand adjustment. Let me just put a Q or question. Let's just go Q1. Okay, and then what is this one? Q3. All right, so stationery asterisk extract on the statement of profit and loss. This is comprehensive income rather. Okay, so obviously stationery is an expense and it will be adjusted for any stationery related transactions. So I did see one. I saw there was a stationery on hand figure here. And they also took stationery for personal use, I think. So let's just get the right amount here. There, stationery purchased. Okay, so stationery purchased was 3048. Okay, and then if we're looking at the adjustments, the amounts that haven't been provided for, there was a note here about stationery here somewhere. Where is it? Here's it. One of the partners, stationery inventory, drawings still to be accounted for. So if it still needs to be accounted for, obviously drawings will be debited. So you debit your drawings, you credit your stationery. So stationery would decrease by 360. Okay, and then they also told you that stationery on hand on the 28th of Feb was 600. Okay, so if you have stationery on hand will be recognized as an asset. So you would debit stationery on hand just to do some revision, because that's an asset account, and you'd be crediting the expense. So you would decrease the expense further by an additional 600. So if I add and subtract all of that, I get 2088.
One thing that, so that won't be the answer. It's 5988. So I read this one as well, because at the top there's stationery at the start of the year.
Was there a balance? Let's see. Stationery purchased.
And then there's also another one.
Oh, okay, there we go. All right, stationery inventory. Yeah, so this is stationery inventory. Stationery inventory would be opening inventory that you had from the previous year, because this is looking at 28 Feb 2021. Yeah, okay, so this is stationery from last year that was basically like stationery on hand, but instead of that 600 we had this year, this is from last year. So last year's stationery on hand would be an expense this year. Okay, so add back last year's stationery on hand. Okay, yeah, so I'll just look at the whole question. That was something that I didn't see. Stationery on hand, that's opening stock 1st March, 3,900. And then let's see what you get. Yeah, I agree with the working or solution answer. Yeah, so they went with 5988. Yeah, that's right. That's fine. Okay.
Awesome. Could I ask? I know I got this one right in the test. Question 4.
We can do it.
Please. I tried to redo it. And
what was the question?
Get it right. Oh, it's not there. Sorry. Purchases. Let me quickly copy it to you.
Okay.
Here's my chat. There we go.
Okay, so this is a cost of sale calculation. All right, so when you have question 4, paste. Okay, so here they're assuming purchases, and they said which of the following alternative will represent cost of sales on the face of the income statement. So you should know from your FAC1601 that there are 2 different systems. The periodic system requires a calculation for cost of sales. The formula for cost of sales is opening stock plus purchases minus any purchases returns plus any other costs, inventory costs, less closing stock.
Okay. I think in this one, where I was coming unstuck was on other inventory costs, but I mean, we'll get there as we go through it.
All right, so copy paste that, and then we'll replace those amounts with what we've got in the question. So let's go back. Okay, so if I go back to the top, just scroll down, I'm looking for anything related to inventory. Okay, there's one. Inventory, 28 Feb 2020. Let's check. That would be 2020. That's last year. That's 28 Feb 2021. So that would be opening stock.
Yeah.
So this figure is going to be 51,000. Okay. Profit on sale of furniture, we don't need that. Delivery expenses in respect of sales. That's not inventory. That's unrelated to inventory. That's normally delivery expenses for sales. That'll be a normal expense. Okay, there's purchases.
Just remember, purchases is 450. The question in the question it says assuming purchases amount of 450.
Yes, this 450 here. Okay, so they don't want you to use what's in the question. They want you to use that figure. So that's fine. Okay, yeah, so it's different to what they gave you in the trial balance, which is fine. Okay. Yeah, you need purchases there. Delivery expenses in respect of inventory, that would be other costs that you would include here. This would be like carriage on purchases. Does that make sense?
Yeah.
Okay, 7, 8. Okay, sales returns, there's purchase returns, 3.5. Okay, settlement discount received. Okay, this settlement discount that's received, I'm going to put asterisks here. They're probably going to offset this with purchases. That's probably what's going to happen. All right, so I'm going to include it, but we need to work it out. Rent, bank charges, depreciation, anything else? Doesn't look like it. No. Okay. All right, then we need to go to the additional information. This was all depreciation. Okay, this was related to the partnership. Okay, here is a note about drawings. Drawings still to be accounted for. Okay, so John took trading inventory, but if John takes trading inventory, that means when they do the stock take, the stock count, the stock count should be lower because John has taken inventory. So you would count less stock on hand. So this inventory on hand figure, because this inventory on hand figure is after he had drawn, I assume that this 22,000 reflects the inventory that is on hand after John has taken inventory from the business. Does that make sense?
Yeah, so even if it
Okay.
says still to be accounted for.
Yeah, because if it says still to be accounted for, remember, if you're looking at drawings and if you're taking inventory from that particular business, remember, what are we doing here? We're calculating cost of sales. So cost of sales is going to reflect how much you've actually sold. So this closing stock, because think about this, if you counted your closing stock, let's assume closing stock, let me just write this down here. We'll see what they've done, but I'm just giving you the background in terms of the actual working. So closing stock, do you agree? Okay, assuming John didn't take any inventory, okay, the closing stock would have been 27,000. Does that make sense?
Okay, yeah.
Okay, all right, because John has taken inventory, the closing stock is going to be 22,000. Right, so
I thought maybe if it still had to be accounted for, it means they haven't included it in the.
Okay, remember,
but I guess
the drawings,
this is also,
the drawings will affect John's account in terms of his drawings, but the cost of sale calculation, because remember, if you had to subtract an amount from purchases, okay, so in other words, if you had to take out the inventory that John took for himself, then you're going to subtract or you're going to decrease purchases. But if you're decreasing purchases, that means your closing stock is also going to be lower because now you've double accounted for it. Does that make sense?
Yeah.
Because your closing stock would have been lower automatically because he's taken stock. So whatever inventory, if they tell me this is the inventory on 28th Feb 2021, that's the stock at the end of the year after they've counted it. That means that this would have been accounted for. The drawing still needs to be accounted for. In other words, the partnership account may be affected by this, but I wouldn't say the cost of sales would be affected by this. But again, let's do the working. We can go and we can check. Right, but I'm just giving you the logic because the logic is here. Closing stock would automatically be less if he's taken anything from the business. So the closing stock is what is used to calculate the cost of sales.
Okay, cool.
Okay. All right. So the 22,000 is going to go here.
Yeah.
And then we're just going to tally up. Okay. This was question 4. Question 4's answer. Let's see. Your answer is correct. Did I add and
Yeah,
subtract
but
correctly?
this is the one I was saying I
Let me go
couldn't
back.
figure out how I got there.
This was the opening stock. That was the purchases. That was the purchase returns. Those were the other costs. And then you subtracted the closing inventory. Unless we needed to add the 5. How much are we out here by? Let's check. 49,800 less this 8,500. Was there 8,500 in this question here somewhere? Was there something else that we didn't look at? There must be something else we haven't taken into consideration.
Do you think if there's a discount doesn't come in? No, it's cost of sales. If there's that 1% discount, would that
the purchases here offset the purchases? I wrote that down. Yeah, so this I didn't take into consideration. Let me just quickly do that. Okay. Copy paste. All right, so against purchases, I'm going to decrease it by the discounts.
No, it was
minus
1%, but that's
let's
only
go
4,
check
5.
what is the discount that was received.
It's not in here. It's in
Settlement
the
discount received is a question mark.
Yeah, it's down here.
Okay, at the bottom here.
There we go.
Total settlement discount of 1% on purchases. Oh, okay, yeah. So 1% of 450,000.
Yeah, it's 4,500.
Okay, so let's update that and see what we get.
But that'll decrease it. Yeah.
Okay, so 1% of 450,000 is 4,500. Okay, so this new figure is going to be 478. So that's even lower than what we had here.
Yeah.
Was there nothing else in the question other than that relating to inventory?
I can't see anything else.
Okay. Because if you offset the discount again, that you said they gave you solutions here. I did open it. Let me just go to the right page here. This is assignment 2. That was question 4. Do they give workings here or just answers?
No, they do give workings if you go down.
Okay, here's a valuation account. There's goodwill, equity, revenue. Okay, here. Cost of sales, there, cost of sales. Opening balance, you've got that. Purchases, you've got that. Delivery cost, you've got that. Closing in, there's it. Okay. All right, so they've taken it out of closing inventory. Interesting. Okay, to me that wouldn't make any sense unless, okay, so let me just put a note here. Okay, so I'm going to delete that. All of that's fine. The only thing I'm going to put a note here is, okay, so looking at their working, they've assumed that the closing stock was before the drawings took place. Does that make sense?
Yeah.
Yeah, but again, they needed to be more specific in the question. So what they said, they assume that the closing stock was the total before the partner withdrew inventory. Does that make sense?
It does, yeah. And I see they also don't have the 335 for purchase returns. They've already included that in purchases. How am I supposed to know that?
No, this 3,500 you do have to take it out.
But check they don't in there.
Yeah, that's incorrect. You have to take it out.
Yeah, so I'm thinking they obviously, when they give that 450, they are saying it's been taken out. That's crazy. I don't know how.
Yeah, so looking at their solution, the purchaser's returns has to be taken into consideration. That you have to include.
Yeah.
So you can actually ask them to review this because this is not correct. Okay, if you go look at the content in terms of cost of sales, the cost of sales formula takes purchases and purchase returns into consideration. You have to take it out.
Yeah, I
The
agree.
closing inventory, this I would agree with, but only if you assume that the cost of sales was before they took stock.
Yeah.
Okay, but we spoke about that whole closing stock situation.
Yeah.
Okay, all
I'm
right, but
comfortable
yeah.
with that. I'll follow you.
Okay, but yeah, so even though you have their working, I don't agree with their working because of the purchases returns. Okay,
Yeah.
so if you had to correct this in terms of what we just said, then you'd have to subtract 5,000 here from the closing stock because you're assuming they are drawing goods. Okay, so then this figure is going to decrease by 5,000, close brackets. So you should get an answer of 488,300.
Yeah.
And if we go back to the other page, it's not even an option, yeah. Yeah, but yeah, there's a problem here with the working. Their working isn't correct. Their working
Yeah.
needs to be corrected in terms of the purchases.
Yeah. I'll make a note this side. Right.
Okay. Yeah, maybe make a note and then post it on the discussion forum or something, just to make them aware of it. Because yeah, if that mistake came up in one of your assessments, it could come up in future again, and obviously that needs to be fixed. This I
Yeah.
agree with, but as I said, they should have been more specific. They should have said the closing stock was before the partner. Because remember, if you look at the question, the closing stock count was after that. So
Yes.
see,
Yeah.
1.4. So it's just natural to assume that 1.5 would have taken that into consideration, but it's not in this case.
Yeah. Yeah.
Okay. All right, Charles. So please just
Cool.
note that the right working is as follows. It's just something we needed to consider. Okay. Happy
Cool.
with that
I'm
one?
happy with that. Yeah.
Okay, 5 you got wrong. Here they're looking at depreciation. Okay, let's do depreciation. This is also a calculation from FAC 1502. They want to know what amount is recorded in the statement of, this is probably going to be the income statement because they're looking at depreciation for vehicles. So I'm just going to put extract of the
So
statement of comprehensive
Anthony,
income.
well, I think it's good for us to do this anyway, but I did see where my mistake came in when I ran through this. And there are some more difficult questions later on. So I actually wouldn't mind if we skip over depreciation.
Okay, that's fine. If you're comfortable, that's okay. I'm
I'm
comfortable if you're
comfortable, yeah.
comfortable. All right, so you happy with 5?
Yeah.
Are you happy with 6?
Let me get that for you. Let me check it. Question 6 was, which of the following is the carrying amount for vehicles? And I got question 6. No. Yeah, let me quickly copy this question.
Okay,
Like
so you want me to
this
cover
one.
6, eh?
Yeah, I think it
So
is
let's
somewhat
go through
related to my
6.
mistake in 5 that I saw. But let's see now.
Okay. All right, so 6 is asking you to look at carrying amount. So just in terms of theory, carrying amount is cost minus accumulated depreciation. Is that okay?
Yeah.
All right,
Yeah.
so they want this for vehicles. Okay, so we need the cost for vehicles. And we need the accumulated depreciation. So let's go and see what we've got in the question. Okay, if we start at the top, we need the vehicles. This was, okay, so this is long ago. So we need to draw a timeline. 1 March 2019. Okay, the vehicles had a cost of 240,000. Okay, then obviously we need to look at the financial year. So the year that we're in is 2021, so it would have started in March 2020. Okay, and then the current year end is 28 Feb 2021. Okay, so this is the financial year. So in terms of disclosure, if you're looking at carrying value, what did they ask for? Carrying value at the end of this
Vehicles.
year. So they want to know what
Yeah.
the cost, what the accumulated depreciation is to get the carrying value. And that's obviously what they want. So they want us to work out that value. Okay, so all that I've got so far is the cost at that point in time. All right, then I've got accumulated depreciation on furniture, and I've got accumulated depreciation on vehicles, but that's a question mark, and that's 28 Feb 2020, which would have been here. So this accumulated depreciation, you don't know. Okay, obviously the cost will stay the same.
Yeah.
That doesn't change. It's historical costs. You can't change the past. The past is the past, but the carrying value will change over the useful life of the assets. Okay, then you've got, let's see if there's anything else here. That's furniture, so don't need that. There doesn't seem to be anything else here except depreciation, but also furniture. Was that it? Yeah, that's it. Okay, so looks like I am going to have to work out 5 for you.
Yeah.
Okay, so if I'm looking at 1.1, on vehicles, according to the straight line method, the expected lifespan of each vehicle is estimated to be 10 years. That's important. So 10 years useful life. So the depreciation rate is straight line, basically 10% per annum. Okay, the residual value is 25,000. That's also important. The residual has to be taken out. Okay, the residual was 25,000. Okay. Was anything else? A new Toyota Bucky was acquired on the 1st of December. That's important. So March. Okay, so 1 December.
31 now.
This was 2020. Okay, there was a new vehicle.
31st of December, because I think that'll be a month of
Sorry, I wrote 31. There we go. 31 December. And that was 340,000. Okay, there was no vehicle disposed during the year. Okay, so I actually don't have to worry about this. Okay, the cost they gave you was for the old vehicle anyway, so I don't actually have to do question 5. I can focus my attention on question 6, because question 6 is asking you about the carrying amount. Oh, for vehicles, so both. Actually, you do have to look at both. Okay, so yeah, I'm gonna have to look at both. Okay, so you've got 2 vehicles. You've got the old and you've got the new. Right, the new vehicle was 340. Okay, so we're gonna have to add 340 here. Okay, that will be at the end of the year. All right, so this accumulated depreciation is going to be on the old vehicle, taking the residual into consideration. So if I'm looking at this period, okay, so March to March, that would be 1 full year. Do you agree?
Yeah.
Okay, so the depreciation would be the 240,000 times 10%. Oh, be careful. Residual minus the 25. Okay.
Wow.
All right. So 240,000 less 25, close brackets, times 10% is 21,500. Okay, which gives me a carrying value. I don't actually need the carrying value because this was straight line method, so that only applies at the end. Okay, so this costs. Okay, did I have this old vehicle right up until the end? Yes, I did. So I have another year of depreciation. So this times 2, basically. Does that make sense?
Yeah.
Okay, so the carrying value would be the costs less the accumulated depreciation. Right, this new vehicle was only used for this period of time. Okay, so when I do depreciation calculations, I always draw a timeline. All right, so December, it's at the end of December, so you used it for January and February, so you used it for 2 months. Make sense?
Yeah.
Okay, so the depreciation calculation would be the 340,000. Okay, was there a residual for this asset?
The
For
residuals.
the Bucky, does the Bucky have a residual?
It doesn't say it in the
Okay, then if it
question.
doesn't say anything, then we won't put it in. Okay, 2 over 12.
Okay.
Right, and then let's see what we get here. Okay, so 340,000 times 10% times 2 over 12 gives you that answer there. So this, okay, so the carrying value would be 340,000 less that. Okay, so the total CV for vehicles would be the two vehicles added together. Okay. All right. Yeah. Oh. Why is it 750? That's weird. I don't know how they got 750. Okay, unless they're rounding something. But what would you round off here? I don't see any rounding here.
I wonder what that is.
Okay, let's go see their solution. Which one is it here? Here's the vehicle. Which vehicle? There. This is the old vehicle. Okay, so do I agree with their working? Let's check. 197. I agree with their working. Okay. Do I agree with this one? Why
They've
are
also
they
taken
using a
off
residual
residual.
here?
Yeah, so I'm guessing they want you to assume that it's for all vehicles. But the question
But
clearly
that's not
says,
right. Yeah, that's not right. You can't assume every vehicle has the same residual. I mean, if you're buying a Bucky won't have the same residual as a sedan or a luxury vehicle or a truck
I
or
guess
a
if you check the question, I guess if the way they worded it, it does say on the vehicles,
where
on the
the
vehicles in that
residual
actual
value
question.
thereof on the vehicles, according to the expected lifespan of each vehicle is estimated to be 10 years. The
Yeah.
residual value thereof is estimated to be 25.
So I
Yeah,
agree that
maybe.
it shouldn't actually be applied to the new one, but like I think the
Yeah,
way they worded it, it kind of covers them there
yeah, but
on the vehicles.
yeah, like yeah, they could do a lot more in terms. They should have said here, this vehicle has the same residual as, or this vehicle. Yeah, I don't know. I just think it's a bit of a yeah. But let's see, is the option there? If the option's not there, then you can maybe say, okay, fine, I didn't get an option. Now I need to take that into consideration. So let's see, is my answer there? No, but there's one that's close. So you probably would have selected
Yeah,
that option anyway.
yeah.
Okay, but yeah, if you do so, just let me just put a note here, notes. If you assume the same residual for the new asset or new vehicle, then the depreciation is, and then let's do the working. So it's the same calculation, except the only thing you're going to do is add a negative 25 there. Does that make sense?
Yeah.
Okay. All right. So okay, I can see why you wanted to look at the solutions because yeah, there are some problems, hey? Yeah.
Yeah.
It does help, but like I said, they should be more specific in their answer, in their question actually. But anyway,
I
that's a
agree.
whole
But at
separate
least like
story.
if I see how you do it and I don't get a matching answer in the question, I can at least,
Try your best to get
yeah,
something
look at,
that's there, yeah.
yeah.
Yeah. So with this one, because it's multiple choice, I wouldn't have been stressing too much. That's why when I looked at this, I was like, okay, my answer is 531,333, and I'm looking at this, and that's the closest option. But I'm thinking, well, did they use rounding or like what did they do? Then
Yeah.
we looked at the residual story. Now we put the residual in, and now we can see, oh, okay, fine, it works. Okay, and then we'll be like, okay, good. Now we know they wanted us to do that, but you shouldn't have to do that in an exam, unfortunately. It's
Yeah.
just one of those things. Okay, yeah, right. These should be checked ahead of time. Actually, like someone should be doing these questions before it gets given to the students in an exam, because they should pick up things like this. if someone did this question beforehand, they would have been like, oh yeah, I think it's a good idea to tell the students to include the residual, and then they
Yeah.
should be more clear in their question. But it's fine. It is what it is.
Yeah.
We just got to make it work. Yeah.
Yeah, true.
Okay. Does that make sense?
Yeah, I'm with you.
Okay.
With this.
7 you've done.
Yeah, happy with
8
that one.
you've done. 9. Okay.
Happy with
9.
that. Yeah,
Interest
I didn't
calculation
actually.
looks like it.
Yeah, I didn't get through this. So I'd like to just see what I did wrong, maybe.
All right, let's go through it. Question 9. Okay, with interest calculations, you need to remember the basic formula for interest. You've done DSC, so you should be fine with this.
Yeah, I don't know what I did wrong.
Interest equals principal times rate times time. Okay, depending on the difficulty in the question, I don't think they'll give you compound interest in one of these questions because it's quite basic. Because it's accounting, not DSC. If it was DSC, then you can assume everything compound because the testing or the focus is a bit different. But if it's accounting, it's generally going to be quite easy to do. But we'll look at it and we'll see. They said which alternative will be included in the trade payables line item for the interest on long-term loans. So that means there's an accrual here. As soon as they tell me including the trade payables, that means there's an outstanding accrued interest payable line item. Does that make sense?
Yeah.
Do you see the logic?
Yeah, that makes sense.
Okay, so let's go to the question and let's see what that accrual is going to be. Okay, the first thing we need to do is look at the balances and see what we're dealing with. So we have a loan, obviously. Okay, I see the loan here. It's unsecured. It's 150,000. Okay. What else do I see here? I see any interest? Yes, the interest expense paid on the long-term loan. Okay. This is the paid portion. All right, the paid portion was 18. Okay, anything else? No. All right, then.
I just sent you a note that I think isn't showing in your.
Oh, is it missing here? Okay, it's fine. I'll use it then. Let's just see depreciation. Nothing there. Nothing there.
Yeah, it comes.
The partnership
it comes
stuff,
right. It's there.
The discount,
right after
the premium, the current account. Okay, yeah. So I do need this. Okay. All right. Let's paste that there. Okay. All right. So this is interest rate of 21%. When was the loan acquired? On the 1st of June. So again, you need that little timeline. So I'm just going to copy paste this. Okay, delete that. All right, so we acquired the loan on the 1st of June. That's during the year. So it's a pro rata scenario, 2020. Okay, so the loan was acquired on that point in time. So how many months is that? June to Feb. June, July, August, September, October, November, December, January, February. I'm counting 9 months. Do you count the same?
Yeah.
Okay, so my interest will be principal, which was 150, times rate, which was 21%, times 9 over 12 gives me an answer of 23,625 less what's paid gives me the accrued interest expense. So this less 18 gives me 5,625. So that would be the accrual part of the loan that's outstanding. Make sense?
Yeah, it does. I think I got it wrong because I put the answer for the interest.
Which one was this? No. This is question 8. No, question 9. Question 9. 5, 6. Okay, perfect. All right, yeah, sorry about that. Okay, so just before that timeout, we were looking at the interest calculation. Let me just put this back up. Okay, yeah, this is question 9. Yeah, so question 9, that one was wrong. You went with the total. Yeah, so you worked it out perfectly. you just didn't read the question carefully. The question was asking you for the trade payables portion, which is the accrued interest expense. Make sense?
Yeah. Yeah, it does. Yeah.
Okay. All right. Let's see. 10 you got right. 11 you got wrong. Okay. This is looking at the partnership. New partnership looks like it's. Yeah. New
Yeah.
partnership, new question.
Looks
Okay.
like you might not have the full question there. Let me just check.
Yeah. I've got everything up and I think this is probably the bottom bit. So I've got the ratio of. This looks like a profit sharing ratio. Let's see what they asked you to work out. Which of the okay, this is the valuation account. This might be a change in ownership or a liquidation depending on the situation. It's probably a liquidation actually, or a dissolution. Okay, but we'll see now. Let's just go back to the chats.
The first question is, what relates
To the
inventories and
valuation
furniture
account.
and equipment?
Yes.
Yeah.
So
Let me see.
so when
What do you need from me?
I need. Let's just see. What do
Since
I have?
it cuts off.
Okay. How much of the top is cut off? Do I need anything else above here? Because I don't know what else was said before.
It just says they're in a partnership and they shared the profit and losses in the ratio of 5.4.
Is that it? Okay, then that's fine. I
Yeah,
don't need any of that. Okay, then
cool.
then as long as there's nothing important cut off, then that's fine. Okay, so yeah, let's just work with it as is. Okay, so okay, let's just read the context first. Okay, when I looked at the required, I can see that this is a valuation account. Okay, so again, just to revise some theory, when there's a change in ownership, and now we know what the change is. It's not a dissolution, it's an admission. So basically, you're allowing a new individual to enter into the partnership. Okay, when that happens, you need to basically value the assets and liabilities in that particular partnership the moment the new partner is coming in. So before and after they come in. Does that make sense?
Yeah.
Okay, so when you're looking at a valuation, all the assets and liabilities need to be valued at that point in time. So here they're saying, which of the alternative represents the amount recorded in the valuation account relating to inventory and furniture and equipment? Okay, that's fine. Right, this is question number 11. Okay. All right, so this is a valuation account for partnerships. Okay, and we need two things. We need to look at which ones. I need to go back down. I need to look at inventory
and furniture.
And I need to look at furniture and equipment. Okay, so that's fine. All right, so now that I know what I'm looking at, I can go back to the question and I can see what were the amounts. Okay, so the profit sharing ratio is 5 to 4. Let me just write that down as well. So K to M, this would be 5 to 4. Okay, so K gets 5 over 9 and M gets 4 over 9. Okay, all right, let's see what else there. K and M decide to admit Q, the new partnership. Okay, and the profit sharing ratio between, okay, they've given you the new ratio. Okay, so that's the old ratio, then the new ratio, okay, is KMQ or KQM? KQM.
KQM.
All right, so K gets 4, 2, and 4. All right, so that means K gets 4 out of 10. Q gets 2 out of 10. And M gets the same as K. All right, what else do we read in the question? That's it. Okay, fine. All right, then we've got inventory. Okay, so let's draw up an inventory account. Okay, I'm just going to keep it very basic. Just going to draw it like that. And then I'm going to do the same thing for the furniture and equipment. Okay, so you're drawing up those two accounts. Furniture and equipment has a balance. So does inventory. Okay. All right, so the balance for inventory was 36,000 and the balance for furniture and equipment was 96. Okay. All right, what else do we have in the question? Let's see, there's nothing else there. Okay, then they said the appraisals were done, that's fine. The trade receivables control account, okay, that's fine, we're not looking at that. Okay, inventory was worth more than what it was. Okay, so if it's worth more than what it was, obviously the benefit is going to be split to the partners. Does that make sense?
Yeah.
Okay, so there's going to be a valuation. Let me just keep it simple. Let me take out this. Okay, the valuation is 43750 less what it is worth currently. Right, so there's an additional 7,750 which would be added to the value of the inventory. Okay, so
Yeah.
I don't know how well you know your T accounts, but a valuation account is just a working account. Okay, this valuation account doesn't have a balance. It basically works itself out. So if I'm going to be debiting the inventory, let me just show a gap in between here as well. Just so you can see debit and credits. Okay, if I'm debiting this, I'm going to be crediting that. Okay, then you're going to have inventory here.
Yeah.
And then obviously the benefit gets given to the partner's capital account. So capital K and M. Does that make sense?
Yeah.
Okay, yeah, that's just basic theory. But as I said, you just need to be familiar with it. All right. And obviously that'll be assigned to those partners. Okay, but yeah, this is important for now. Okay, and then the furniture market value is 125. So again, same thing. Okay, gives you the 29. All right, so that's the additional. So we've got that. After the valuation adjustments, Queen admitted partnership. Queen paid 70. Okay, that's fine. That's got something else. That's goodwill and all of that stuff. So that's fine. What did they ask you here? Which of the following alternatives represents the amount recorded in the valuation account relating to inventory and furniture equipment in preparation for the administration of Queen? So it'll be those two amounts added together. Make sense?
Yeah.
Okay, yeah, you
Looks
got
like,
it right. Did you?
it looks like I have it right.
Oh, hold
They
on.
said it's 34.
The correct answer is 34,250. Okay, that's very strange. Let's see. Let's see. Answers, hey, here. Okay, let's go down. Where's the liquidation? Okay, this is liquidation. Capital. This is the different partnership. Where's the other one?
I think it might be above it.
Is it above?
Yeah.
Yes. No, this is the vehicles.
I think a bit more. Yeah.
Okay, here.
Good rule.
Okay, there,
No.
inventory, yeah. All right, that was the total. Yeah, I don't know why they're taking this out. Okay, the allowance for credit losses, that affects accounts receivable. That doesn't affect inventory. That doesn't affect furniture and equipment. Does that make sense?
Yeah, I saw a note for that in the.
Because they said so. They should have fixed the question.
Trade receivables control. Yeah.
They should have fixed the question. They should have said, what is the total valuation account? Okay, or they should have added trade receivables here.
You're not relating specifically to inventories and furniture.
Okay, because in the question they only wanted those two. They didn't include the trade receivables, but now we know they should have changed the question. All right, so they didn't want this. They wanted all of it. So they basically wanted the total valuation, taking inventory, comma, furniture and equipment, and trade receivables. That's the problem with the question. Yeah, this is unfair, hey? Like, I would be complaining about this one because your answer is correct. There's nothing wrong with your answer. It's in line with what they asked you to calculate.
Yeah, I'll definitely
Right.
be sending this to them. Yeah.
Okay. They asked for trade. They asked for inventory and furniture. They didn't ask for inventory, furniture, and trade receivables. Now that they're asking for it, now we can do the working. Then we need to bring it in. Okay, but yeah, it's not fair. Okay, they shouldn't have done that. Okay, they should have left this out there, and then you would have worked out all of it. Okay, but because they've only included 2, you're only looking at 2 of the 3. If I look at those 2, your answer is correct. There's nothing wrong with your answer. I got the same answer based on what they asked for. Okay, but if they're asking for all 3, then we're going to change it slightly because now we have to do this. Okay, but again, this is more working. Trade receivables. Okay, the trade receivables account balance was what? The trade receivables account balance was 24,000. Okay, was that it? Yeah, that's it. And then they said trade receivables control account of 24 and allows accrued losses to the amount of 25 should be created. So that means, okay, this is actually worth less because there's an allowance. Does that make sense?
Yeah.
Okay, so if you're creating an allowance, all right, you're going to be decreasing the value of this asset. Okay, so the decrease in the value of the asset would go to the valuation accounts. Okay, obviously they want you to value this at less than what it's worth. Okay, so then I would take that and I would put that in red. And then I would work out a new total. So now the new total valuation would be this plus that, okay, minus this. Does that make sense?
Yeah.
Okay, then I get the 21,000, which is what I think they wanted, right?
34,500. It's including inventories and equipment.
Ooh, hold on. Yeah. Hold on. Okay, yeah. Okay, I need to do this first. Okay. Yeah, so the valuation decreases. So your trade receivables will be okay, 21,500. That's the balance. Okay. Ooh, what happened here? Something happened here. Oh, it's adding the wrong figure. Hold on. I can't just copy paste that formula. Okay, the new valuation is going to be this plus that minus this. There we go. That's better.
Cool.
Okay.
Yeah.
All right. Happy.
Yeah, happy.
Okay. What number was that, eh? This was 11.
That was 11. Yeah.
Okay. Yeah. Okay. Let's see. 12. Okay, I don't see if you got 12 right or wrong. I see the question, but I don't know if you got it right or wrong. Did you get it right?
Yeah, there it is.
Okay, you got it right. There, answer's correct. Okay, that's fine. 13 you got right. 14 you got wrong. Okay, what is 14's question though?
I'll get it quickly.
Oh, goodwill. Okay, nice. Okay, yeah, goodwill always comes up, hey? All right, question
Okay, cool.
14. Okay, what do you understand by goodwill? You tell me before I give you the revision.
Just if I want to be a part of a partnership that I'm not yet a part of, I need to contribute something to the partnership to get some sort of share of the profit, or take some share of the partnership.
No, not quite. Okay, that understanding is incorrect. Okay, so goodwill is what was created while the partners were operating before bringing in the new partner. Okay, so think about this. All right, remember you've got K and you've got M. K and M have been running a business for a certain number of years. Okay, that business will be generating sales, operating, creating a reputation, building brand, etc. Okay, when a new partner is entering into a partnership, that partner is going to be paying a portion, okay, or paying something towards a portion of the business. But if the business is successful, and because someone else wants to come into the business, sometimes that partner might pay more than what the business is actually worth. And that's what goodwill is. So goodwill is the difference in terms of the total consideration. I've got a nice I've got a nice slide on this. Let me show this to you quickly. This is 1601, hey. This is partnership. This is a change in ownership. I think this is number 4. I think this is number 4. Change in ownership. Yeah, this is liquidation. Yeah, there's the liquidation. Oh no, this is a bit further. Liquidation, I think change is number 3. Yeah, you get simultaneous and a piecemeal liquidation. There's goodwill. There we go. Okay, so goodwill is a non-current asset. Okay, goodwill is basically something that is created when a new partner is entering the business, and the calculation is here. Nope, there. Okay, goodwill calculation. All right, the total purchase consideration. Okay, less total equity of the new partnership. Because think about it. Okay, when someone pays for a portion of the business, they're paying to get in. Okay, obviously the business is doing well. That's why someone else wants to get in. Okay, the business is going to have a new partner. Okay, so let me just copy paste that formula. There's it. Okay. All right. So that's what you need. Okay, once you've got that, then you just have to do the working. Ooh, hold on. There's something wrong here.
It's just down in a column. If you double click on that, it should help you. If you double click on that cell. Yeah.
Okay. That should look better. Yes, okay, there we go. All right, so the total purchase consideration. So now, okay, now we go back to the question. Let me show you how this formula works. Okay, what did the partner pay? Queen paid
17,000.
70K for 20% interest. All right, obviously 20% interest is 1/5 of the business, right? So that means that the business is actually worth 350,000. Does that make sense?
Yeah, okay.
Okay, so 70K for 20%, which is 1/5 of the business. So if I'm looking at the total purchase consideration, 100% of the business would be worth 5 times the amount that they paid. Make sense?
Yeah.
Okay, so 70,000 times 5, okay, less this bit. Okay, so that gives me 350,000. Okay, less the total equity of the new partnership. That I need to calculate. Okay, so where is it? Let's go up. Okay. All right, so the new partnership. Okay, I need to work out how much equity the new partnership has. Okay, so the new partnership is going to have the old equity. Okay, so what was the old equity? Well, actually, I don't have to look at the old because I already have the new, so I can just focus on the new values. Okay, so how much does this business have? Furniture and equipment. Okay, they've got furniture and equipment of 96. plus, what is that addition? Oh, don't even have to show it. I can just write these figures in. Okay, 125. There's the furniture equipment. The inventory was 43,750. Okay, the trade receivables was the 24 less
Minus
the
25,
25. Okay. All right. Have I looked at all of that? Yes. Okay. Go back. Okay. So this I've got. This I've got. This I've got. Okay. Trade payables. Okay. Trade payables is a negative 18,000. That's at fair value. Okay. You've got bank. What is bank? Bank is an asset, right? Asset is cash. So the new partnership does have cash. And that cash amounts to 30,000. Okay. Hold on. The new partnership. Let's just think about this. The new partnership, yeah, the new partnership will have cash because it's a debit balance. Okay. And then all of the assets and liabilities should equal the capital. So the owner's equity of the new partnership is basically assets minus liabilities. Does that make sense?
Yeah.
Okay, so but remember the partner is contributing 70,000 Rand to the business, so that's going to increase the new partnership's cash. So
Yeah,
that's going to
okay.
be, that's going to go up by an extra 70 because that's what they bring into the business, right? They did say he gave 70, right?
Yeah.
And he paid that into the bank account
bank
of the
account.
business. Yeah. Okay. All right. So that means total equity of the new partnership. There's it there. Okay. So that amount is the new partnership equity. Does that make sense?
Yeah, yeah, following.
Okay. All right. So oh, 27. Oh, too many twos. Okay. So goodwill is going to be 350 less that. Okay. What question was this?
It was 14. Why not? Yeah, I can see the answer there.
There we go. Right, now you know how they got it.
Cool. Okay, great.
Okay, 15 you did, nice. 16 you did, nice. 17, that's good. 18, 19, 20, 21, 22, 23, 24. This looks good, eh? 25, I think that's it. Is that the last question? No, there's more. 26. Okay, yeah, 27. Okay. All right. What is this one looking at? Which of the following alternatives represents the correct amount that must be allocated to Kylie relating to the amount received from debtors? Okay, interesting. Let's go see what we've got here. What is this? Looks like a partnership. No, looks like a CC
kind of
maybe.
liquidation or something.
Let's see what
let me quickly. I see it's cut off there again.
Yeah. Okay. Question 25.
I'll quickly read it. Just one sec. It is a partnership. Let me just put that up to where it's broken off. And you can quickly just read it. You don't have to copy it anyway. It's basically just a description.
Okay, yeah, it's fine. Okay. All right, so you've got 3 people, 3 Ks. Okay. All right, that's fine. Okay, so wow. All right. We do need to put their names actually. Looks like the examiner was a fan of the Kardashians.
There's always some odd thing they put in just to make it fun, I suppose.
Yeah. Okay. 532. That's it. Hey. Okay. Fine. So at least we have that. So now we need to just quickly do this. Okay. So that's 5 over 10. 5 over 10, 3 over 10, 2 over 10. Okay, all right, let's see. Due to dispute on the mathematical data operations, they have decided to dissolve. Okay, this is a piecemeal liquidation. Okay, so with a piecemeal liquidation, you have to drop a table. Okay, I've got a nice free video that's been on YouTube for quite a number of years now, actually. That takes you through a piecemeal liquidation situation. I don't know if you've looked at that yet or not, but it basically covers the theory as well as the actual workings behind it. So if you do find the piecemeal liquidation a bit difficult, you can tell me and I'll send you that additional video. How are you with piecemeal liquidation? Does it make sense? Do you know how it works?
Sorry, more information would help out.
Okay, all right. So then I'll just make a note here. See other example. Okay, so basically what happens in a liquidation, okay, if it's a simultaneous liquidation, simultaneous means you basically sell everything. It's like a garage sale. Okay, let me again use those. I think I still have it open even. Yeah. Okay. All right. When you have a liquidation, there's two different liquidations. There's this one, okay, simultaneous, where everything is sold off. It's like a garage sale. Okay, and you use a liquidation account. So basically, you put everything into this liquidation account, you sell everything off, you get as much money as you possibly can, you pay everyone off, and then you go your separate ways. Okay, piecemeal means you're going to be selling assets in stages because it's not in the best interest of all the partners to sell assets at less than its carrying value. Obviously, you don't want to make a loss when you sell assets, right? So when businesses liquidate, okay, when businesses are dissolved, let me rephrase, when partnerships are dissolved, okay, those partnerships can be dissolved using a piecemeal liquidation method. Okay, with the piecemeal liquidation method, you've got to drop a table and you've got to have different columns representing the equity that each partner has in the company, and then you need to track all the assets that the business has and all the cash that is created in that particular business. Right, and only when cash is available for distribution, then you're going to be distributing cash to the partners. So it's done in stages. Okay, that's the short version of the theory. Right. I have noted it, so I'll send you some additional content that's available on the actual YouTube channel, and you can watch that. It's a helpful process that I've recorded from start to finish, just explaining the liquidation, because this section is so difficult. And they do test it often. It's quite important to understand the process. Okay, the textbook does describe the actual process. I just want to show it to you here. The method, there are different methods that you can apply. The one that they apply is the loss absorption capacity method. And the reason why this is applied is because you don't want a scenario where partners are unfairly paid for their equity in the business, where for example, one partner might have been irresponsible and they've got a debit balance of their current account and they're actually owing the partnership. And then you've got another partner which has a capital or credit balance and their capital is sitting in the partnership. And then you're asking yourself, okay, now, which partner do I pay out first? Because I only have a certain amount of money. Obviously, partners are going to be fighting or arguing about the money that's available in the partnership because they all want to get out of this partnership. So to keep things amicable in terms of partners being distributed their fair share, this method that's applied gives each partner an opportunity to get paid out what they are supposed to be paid out based on a maximum anticipated loss. In other words, if you can't sell any additional assets and you only have a certain amount of money left in the business, based on the current situation in the partnership, which partner is in the best, inverted commas, situation? Okay, and that's why they talk about maximum anticipated loss. Okay, and I'll show you how that works in an example. Okay, so hopefully we can do it here, but we'll see what the question is asking you for. I just want to look at the question quickly first. Okay, so you've got that. Okay, that's fine. You've got this. That's fine. You're going to have all of these in a table. Okay, let me see if you actually need to draw up the table here. What is the question asked for? What was question 25? Okay, that was question 25. All right. Okay, so which of the following alternatives represents the correct balance in the capital account of Chris at the commencement of the liquidation? Right. So at the commencement. So they don't want you to do the loss absorption capacity method. They just want you to look at the commencement. So before liquidation. Right. So that's quite easy. You're not going to draw up the whole table. You're just going to draw up part of the table. All right, so the table needs to show every single asset and liability, every single account basically. So let me just write that down. Okay, so I'm going to leave some space just to put headings. PPE.
You should be able to, sometimes it copies out quite well out of the document there.
What do you mean out of the document?
If you had to copy paste that text straight out of that PDF.
Oh, okay, it's fine. It's not too bad. I think typing is alright instead of copying pasting everything. Okay.
No, as in like if you copy the whole thing, it puts all the values in a separate column to all the text.
Oh, okay. All right, that I haven't tried, but it's fine. I'm almost there.
Cool.
I'll do it next time. Chris, and then Kylie.
Oh, yeah.
And Kim. Okay, and then you've got Goodwill. Okay, so this is what you have to do when you do a piecemeal liquidation, okay, and you're applying the loss absorption capacity method. Okay, so basically you're going to have balances, all right, and those balances, okay, let's try what you said. I'm going to, oh no, but it won't work now because I'm going to copy paste all over, but let's try it. Let's see.
Let's see what happens. But remember, you've done the columns differently, so you'd have to paste the transposed, but maybe we try it a different time.
Yeah. Okay.
I'd have to show you how that works.
14400 96 126. Okay, all right, so those are the balances that you have. Okay, so again, just in terms of theory, just some revision. Okay, so all your assets minus your liabilities need to equal equity. So when I look at this, obviously equity is that. Okay, so I'm just doing this purely for understanding, okay? And then goodwill is obviously an asset. Property, plant, equipment, those are all assets. Okay, this is a loan from and a loan to. So we need to, we need to differentiate loan from. Okay, if it's a loan from a partner, asset or liability?
Liability.
Correct. Okay, long-term loan, debtors and bank, all assets. Okay, so you have to always check this when you're doing a piecemeal liquidation, because if it doesn't work, you need to start over basically. Okay, so my assets, oh, okay, let's do it this way. I can't actually sum it nicely. Let's just do each of them. Okay, and then liabilities. And then owner's equity. All right, so owner's equity is assets minus liabilities. Okay, and then if I add up all of the capital, I should get the same thing. If it's the same thing, then I can work with it. No, it's not. Okay, it's not the same. So there's something wrong here. We need to go check in the question. All right, additional information. Here we go. Okay, there's a problem here with these balances. These balances should all tally up nicely. In other words, when you add up all your assets, okay, and when you add up all your liabilities and you subtract, okay, so assets minus liabilities, I've got 400,000. Okay, I don't have 400,000 here. which is a problem. Okay, the capital needs to add up to 400,000. It doesn't. So there's an issue here in the question. Were there any other balances? No, there weren't. Okay, so here, the surrender value of the insurance policy was taken out on the lives of the partners is currently 50,000 and is to be paid to the partnership on the 7th of July. Okay, this is on insurance. So this is something that they would get in terms of cash that's available in the company that can be distributed to the partners. But when did they dissolve the partnership? On the 1st of July. Okay. All right. So we actually need to look at, okay, but I'm highlighting this because this question actually isn't good, because you need to have a question where everything is matching. All right, because there's missing pieces here. You don't have all the information. There's definitely capital that you're missing here, or current account. You're missing current accounts here. I don't see any current accounts. I only see capital accounts here. Okay, right. There
Yeah.
should be current accounts. So that's the problem. Okay, but yeah, if you go watch that other video that I'll send to you, you'll see there's a proper example working through all of the different situations and the different stages of the liquidation, and then that will make more sense. But for now, I'm just highlighting it because this question is problematic because owner's equity isn't correct. Your assets and liabilities don't match up with the owner's equity in this question. So there are missing columns. Okay, but we can probably still work this out because they only want us to calculate before liquidation. So see, commencement of liquidation. Which of the following alternatives represents the correct balance in the capital account? So capital account of who? Chris, this one. Okay, let's just highlight that partner. Okay, we're looking at that partner before the commencement of the liquidation. Okay, so that's fine. So before the commencement of the liquidation means the goodwill needs to be allocated. Okay, goodwill, remember, is an asset, but an asset only if the partnership continues to operate. So you need to remove goodwill. Okay, because goodwill doesn't exist if the partnership closes. So goodwill is going to decrease the capital for each partner. So each partner is going to get a share. How much does Chris get? Chris gets a half, 5/10. So half of it. So goodwill times 50%. Okay, so 12 is going to come out of Chris's capital. So we're going to have to show that as a total. Okay, was there anything else? Let's go read the question. This was on the 7th of July. That's after the liquidation was decided. The settled before 21st July discount. Okay, that's also after. That's 25 July, 7 July. The partner's loan account is to be transferred to the capital account. Did Chris have a loan account? No. Kylie had one. Chris didn't. That's fine. The partners agreed to distribute the sales immediately in such a way. Okay, that's the loss absorption capacity method. Assets were sold for cash as follows. Okay, this is 7 July, that's 12 July. Right, so the answer should be 144. You went with 144.
144.
Yeah, that's correct.
Cool.
Okay. Oh, which one was I doing? I was doing 26.
It's cool though. This helped it a lot. So I'm glad we did it.
Okay. All right. I thought you got that wrong, but you got it right.
I got 27, I think, or something like that wrong.
Okay, I see I have less than a minute. It's going to time out, so we'll have to just restart again. But yeah, 26 was right. 27 was the one that was wrong.
Yeah,
here they're asking about Kylie. Okay, we'll do this one just now. Okay, well, let's just restart before it times out. Cool. All right. Okay, so back to what we were saying. When looking at a piecemeal liquidation, you need to drop all these columns. Okay, so yeah, you got it right. For Chris, the one that you got wrong was 27 actually. So this was question 25. Okay, so question 27 says which one of the following alternatives represents the correct amount that must be allocated to Kylie relating to the amounts received from debtors. Okay, so they're talking about debtors here. We need to go back and we need to look at these debtors. Where's the debtors bit? Here. Okay, so they're saying an agreement was reached with all of the debtors that if outstanding balances are settled before the 25th of July, a discount of 10% will be granted. On the 7th of July, 90% of debtors had settled their accounts. So 90% have settled, and that is before the 25th of July. So there will be a 10% discount granted on the 90% of the debtors that settled their accounts. Does that make sense?
Yeah.
Okay, so let's write that down. NB. Okay, debtors will decrease by 10%, brackets, a discount that's provided for. Okay, obviously this discount will be seen as a settlement discount allowed. And obviously because the discount is being allowed, this will affect the partner's entitlement. Does that make sense?
Yeah. Yeah.
Okay, so when that happens, their entitlement will decrease because of this particular discount. So let's see, what is the discount? Let's work it out. Okay, so the discount is 10% of the 90% of the debtors. What was the debtors? Trade debtors, 126. Are you okay with that?
Yep.
Okay, so there's a discount of 11,340 which needs to be allocated to the partners, right? So that's going to affect their owner's equity. So if I'm looking at, what did the question say? They just wanted the amount that's allocated, right? They didn't have to, we didn't have to work out the balance. What did they say? Question 26, wrong one. Question 27, correct amount that must be allocated. Okay, so if it's the correct amount that must be allocated to Kyle, it'll be a portion. So, sorry, I don't know if you can hear me. That says internet connection unstable. Can you still hear me?
It's back now, but I'm with you. I'm with you where you are.
Okay, sorry about that, Joe. I see the Wi-Fi dropped a little bit. I got a message up on screen, so I knew there was a problem with it. Let me just... okay, there we go. All right. Okay,
It's quite clear now, yeah.
Okay, yeah. Okay, so the amount that's allocated to Kylie. So Kylie, how much does Kylie get? Kylie gets 3/10. So you would allocate 3,402 to her. Okay, they're going with 2268. Ooh, that's also not right. Let's see what they've done. Maybe they've asked you, let's just read the question. Correct amount that must be allocated to her relating to the amounts received from debtors.
So the only thing I could figure out, but that would increase it, was that no.
Okay, so it seems to say, I don't know if they're asking for the cash. Maybe they're asking about the cash. In other words, how much cash does, who's it? Kylie, right? Yeah.
Kylie.
Okay, it might be the cash. So maybe they're not asking about this in terms of the portion. This, to me, would be the answer in terms of how I've interpreted it. Because this discount, I see you went with, you went with that one. Okay, but I see there's the answer there. There's the discounted amount. Okay,
yeah.
But yeah, this discounted amount needs to be allocated to the partners. All right, so you have a working here. Let's go check their solution. Is it this one? It's this file. Okay, so we're looking for the piecemeal liquidation. There should be a table. Do they give you a table?
I think this was right at the bottom. Yeah, we saw it just now.
Okay, here's the discount. No, this is something separate. No, this is a different partnership. Okay, yeah. Okay, yeah, here's the triple K. Yeah, okay, so let's see. Okay, they're asking you about the amount received. There we go.
I see the answer. The answer is by Kim.
There's Kylie.
There's Kylie. But I'm saying the answer in there that they said is correct is by Kim.
Ooh. So they're asking you for the wrong Kardashian. Shit, they even confused themselves. That's bad, eh? Well, that's bad, eh?
That's what happens when they're trying to be too creative.
Wow, yeah, that's bad, eh? Yeah. So this whole question's wrong. Let me just put a note here. Okay, so are you happy with this? This is how much Kylie
Yeah.
gets. That reduces her equity. Makes sense?
Yeah.
Okay, let's do all of them. Okay, if I just copy paste this. Okay, what is the other one? Chris got 5 over 10 and Kim gets 2 over 10. So Chris, 5, and Kim, 2. And Kim. Okay, so this is 5. And this is 2. Yeah, I would, if I was you, I would query this as well. You should get a mark for this, because the answer's not even there. They're asking for the wrong person. That's not fair. I think they can probably award you a mark for this. Okay, if they asked you for
Yeah.
Kim, then I agree with the 2268, which is there, and that's what they wanted. But then they shouldn't have asked you for Kylie. So, yeah, so query this with them. I think they might give you the mark.
Yeah, cool. I'll query that. I'll have a whole
Okay.
list for them.
Right. Let's see. 28 you've got right. 29 you've got right. And 30 you got wrong. Okay, what was question 30?
Getting it now. It was pasting it. Balance in the assets account.
Okay. Right. Okay, which of the following alternatives represents the correct closing balance in the assets account of KKK on the 7th of July? Okay. All right. So again, you need this piecemeal liquidation table. Okay. All right. Let's delete the stuff we don't need for now. And then we can put in what we do need. Okay. So, right. Okay. So that's the question. You've got everything. All right. They wanted you to determine the closing balance in the assets account. So which assets account? I'm assuming all of them. So in other words, assets question mark as at 7 July 2021. Okay, so that's what the question is asking you for. So they want me to look at this. Okay, the green columns. Okay, but at 7 July. Okay, so that means if I go back to the question, I need to process everything up to 7 July. Okay, so let me just put those split quick. Chris, Kylie, Kim, 5, 3, 2. Okay, 5. Chris gets 5. 3 and 2, because we're going to need that in case we allocate something to them. Okay. All right, so we have balances here. They liquidated on the 1st of July. Okay, that's what we've got. Okay, so that's the current situation. Right, remember I spoke about the problem earlier. Owner's equity doesn't match with your assets and liabilities. So you can't draw up this whole table. Okay, if you do, you're going to get errors later on because the table's not correct. You have to have owner's equity amounting to 400,000 because your assets were 510,400 and your liabilities were 110,400, which in actual fact should give you 400,000 in terms of equity. Okay, but because this question was focusing on specific things, it's fine as is. Okay, so but just keep that in mind, because if you try to draw up the full table, you won't be able to, because you do have missing amounts. Okay, all right, but having said that, let's see what we have in the question. Okay, so we need to process the first bit. Okay, so goodwill is definitely closed off to Chris, Kylie, and Kim. So that's what you have to do. Okay, so close off goodwill. Okay, if you go look at these notes that I've got here, let me show you. There's a process. Let me show you the process. This is in the textbook actually. Let me just find the one for the piecemeal. Oh, this is change of ownership. Wrong one. This one. Okay. Here, piecemeal liquidation. Step number 1, close off the drawings. We didn't have that. Close off the current accounts. We didn't have that. Close off goodwill and any reserves. We don't have any reserve accounts, but we do have goodwill. So you have to close it off. That's why I'm doing this. I'm just following the process as outlined in the textbook. Okay, so each partner gets a share of this. Because we've calculated it, I'm just going to use what I've got. Minus Chris. Chris got this. Kylie got this. Kim got this. Okay, and then I need subtotals. Okay, goodwill is obviously going to be 0 now. Okay, it's closed off. Make sense?
Yeah.
Okay, so now we're going to have assets that are remaining, those ones. Okay, then we need to read. Okay, the surrender value of the insurance policy taken out on the lives of the partners is currently 50,000 and is to be paid to the partnership on 7 July. That's important. This is something we do need to provide for because they said this was on 7 July. So we have to take this into consideration. So proceeds from insurance. Okay, proceeds from insurance is going to come into the bank account. So bank account will go up by how much? 50K.
Yeah.
Okay, that 50K is going to increase the bank. All right, next. The agreement was reached with all the debtors that if outstanding balances are settled before 21st July, a discount. Okay, so we spoke about this, and this happened on the 7th July, so I have to take that into consideration. Okay, so paying, or not paying, receiving outstanding debtors. Okay, so when I receive outstanding debtors, they said 90% of the debtors settled their account. So where's my debtors control? Okay, so my debtors equals 90%, so times that by 90%. Okay, that's going to be a negative. Happy with that?
Yeah.
Okay. You're decreasing that by 90, but your bank is only going to go up by the 80%. Not 80%, less the discount. Does that make sense?
Yeah.
Okay, so this amount, okay, times 90%, times...
10%.
Hold on, let's do it this way. Okay. The bank figure is going to be the debtors amount, okay, less, hold on, 90% times the debtors amount, close brackets, less, open brackets, 10% of that amount. Does it make sense?
Yeah.
Okay, that's how much money is coming in, and then obviously each partner got a share of that loss. Where was the discount? Okay, we need to put the discount. We closed off goodwill. Oh, hold on a second. Made a mistake. This wasn't goodwill, this was the debtor. Sorry. Okay.
Oh, right. Yeah.
Yeah.
Okay.
Okay, I'm just going to quickly fix that. Okay, the goodwill is going to decrease by 24,000. Okay, and each partner is going to get a share of that. So this amount, okay, multiply that by 5/10. Okay, copy paste. Okay, 3 and 2. All right, so that's fine. That's subtracting, that's fine, that's good. Okay, then this are those amounts. Yes, that's fine, that's good. Okay, that's fine. All right, so I've got that. Okay, so it's still 0 goodwill. Okay, bank has gone up. Okay, if you check these answers, if you sum up, so if I make this a negative and I add up those negatives, I should get the same answer. I do. Do you see that?
Yeah.
Okay, and then obviously a portion is going to be left over. Make sense?
Yeah.
Okay. All right, what else do we have here? Partner's loan account is to be transferred to his capital. Okay, yeah, so the loan account is a liability. I don't have to worry about that because I'm only looking at the assets. Does that make sense?
Yeah.
Okay, the partners, okay, that's the loss absorption capacity. The assets were sold as follows. Okay, here. On the 7th of July, a fixed deposit was sold at carrying value. So proceeds and carrying value were the same, so there's no profit on the sale of that. Oh, hold on a second. It's 10,000, but you got 110. So it did go up. So there is a profit here. Do you see that?
Yeah.
Okay, so the
Okay,
maturing fixed deposits. Okay, so the maturing fixed deposits, you're going to have a negative here of 100,000. Okay, this is obviously also all of this is at 7 July. Okay, there's a lot that happened on 7 July actually. Okay, if we're looking at this question. Okay, you've got 3 different things happening. The maturing fixed deposit, so you're going to subtract 100,000 from the fixed deposit. Okay, the bank is going to go up by 110,000. Does that make sense?
Yeah.
And then each partner gets a benefit of 10,000 shared amongst them. So 5 over 10 for Chris, 3 for the other one, and 2 for the other. Makes sense? Okay,
yeah.
so if I'm looking at assets only, I'm only going to be focusing on assets, so everything in green. Okay, PPE stays at that. The fixed deposit is 0 now. The debtors would be this minus that. The bank would be the 18 plus the 50 plus the receiving amount plus the deposit actually. Okay, and then that would be 0. Okay, so total assets at 7 July before distribution to the partners, okay, is going to equal the sum of all of these. Okay. Question number 30.
30, yeah.
The correct answer is 245,000. No. Unless they've paid out a portion to the partners. Possibly. But what did the question say? The question said, which of the following alternative represents the correct closing balance in the assets account on O? Okay, fair enough. All right, if it's on, then we have to pay out each partner their share. Okay, so I do have to use the loss absorption. Okay, so that answer's not there, so let's apply loss absorption capacity method. Loss absorption capacity method for piecemeal liquidation. And then we'll see if we get an option that's there. Okay, so they said at that point in time. So fair enough, I'm going to have to apportion, okay, the cash to the partners. All right, so how much cash do I have? 280,000. Okay, this cash needs to pay off the loan, okay, because there's liabilities that have to be paid off. So NB, first pay off liabilities before partners. Okay, that's just normal claims to assets. Okay, remember when businesses go bankrupt, when they get liquidated, creditors get first bite of the cash that's available, that's left over. Does that make sense?
Yeah.
Okay, so I need to subtract all of the liabilities, the loans. Okay, but remember, I think in the question they said that Kylie's loan must be offset against her account. Didn't it say that?
I think so.
Yeah, it
Off
did.
capital.
Yeah, the partner's loan account is to be transferred to her capital account. Okay, so this loan account is going to be offset against Kylie's account. So if it's a loan from, it's a liability. So if it's a liability, to close off the liability, you would debit that account and then you would credit the capital. So Kylie's account will increase. In other words, she'll be entitled to more, not less. Make sense?
Yeah.
Okay, so you'd have to add the loan to Kylie. Okay, that's not going to affect my assets though. So the liability, the only liability that I need to decrease is the long-term loan. That's 96,000. Okay, so because I have assets here, okay, you're going to first pay out the liability, the loan. So you're going to subtract the loan. Okay, so that's going to give me, ooh, hold on a second, wrong line. This needs to pay off the, okay, I'm going to move this up there. Okay, and then delete that and then put that there. 96,000 minus, oops, minus 96,000. All right, and then that'll give us a new total. Okay, then that's going to give us a new total for our assets. $49, that's also not an option, hey? They went with a lot lower, hey?
245,
Yeah, they went with 245. Okay, let's check and see. The only thing I can think of is they're probably wanting you to pay out the partners and then see what's remaining. So in other words, this bank figure, this bank amount will be paid out. So the full amount is paid out. So let me just put this down. Or remaining amount paid out. Remaining paid out to partners. Okay, then you'll have the remaining left over. So the only thing, so if bank is paid out to the partners, the only remaining figure that you would have left would be the property, plant and equipment and the debtors. Do you see that?
Yeah.
Okay, so after paying out the partners cash, only the PPE, was it PPE? Yeah, PPE and debtors will remain. Okay, and that amount would equal this figure plus that figure, which is 255. Is that the answer?
So there's 10,000 too much.
245. The 10,000. Yeah, the fixed deposit. I don't think they took the fixed deposit into consideration. Let's check the answer. I did. I don't know if they did. Let's check.
Anything that's 10,000.
Where's the last working? There is no last working. Assets.
I think I've disconnected.
245. There's the 245. Okay, let's see. Debtors. I've got the 113,400. That's fine. Okay, their assets. Okay, balance at commencement of liquidation. Let me check that. Okay, I'm going to add up the assets here quickly just to see if we've got the same amount. Okay, so this amount plus this amount plus this amount plus this amount plus this amount is the 540. But then this was balance at commencement of liquidation. Commencement of liquidation. Looks like they've taken out the goodwill. So if I subtract goodwill, get rid of the goodwill, I get 486,400. That's still not what they've got. Let's see what the difference is. 468,400. Do you think it's a typo? Maybe it's a typo. Look at that. Look at the numbers.
But look what they've done there though. Oh, do you mean on that?
Numbers.
Sorry, on that. Yeah.
Look at the numbers, eh? 18,000. Oh, there's the bank figure.
Bank. Yeah.
Oh, so they haven't taken the bank into consideration. Okay, so here, assets excluding bank.
Why?
But that's what I added here. Assets excluding bank. It was this and this. Those are the only two. Those are the only two. And I had how much? 255. Yeah, I'm sticking with the 255, hey? Because the
Liquid
bank would
amounts
have been paid out. And if they're going with assets, looking at their solution, the asset that they're showing here excludes the bank account. Because your fixed deposit was 100. So if we exclude the bank account, let's just check the working. Let's delete
but
this.
they're minusing 110 for the sale
So
of the
here,
fixed
so
deposit.
this plus that equals the 268. Okay, that's how they've got that. So this amount here only takes the PPE, the fixed deposit, and the debtors into consideration. It excludes the bank and it excludes the goodwill.
Okay, how would you
Okay,
know to do that?
you don't, because remember, this is at the balance. I'm just looking at their working. I'm trying to understand
Yeah,
what they've done. All right, but yeah, their working starts with assets at that figure. For
yeah,
me, I would have started with this, plus that, plus this, plus this, plus this. Okay? I would have started with that. Then I would have taken out the goodwill. Then it would have decreased, which we did do. I closed off the goodwill. Okay? And then the assets came out to here. That was the PPE. The fixed deposit is no longer around. Okay? The debtors are still around, but only a portion. The bank has gone up significantly, and the goodwill is 0. Okay? Then I
yeah.
said, if we're going to pay off our liabilities, we pay off the liabilities, we offset the loan from Kylie with her capital account. Okay? Then the remaining cash is paid out. So yeah, if you pay out the remaining cash,
The only thing I see different there, Anthony, is if
is the
see
sale.
there with where the profit is included, it's 110, not 100. Whereas we're only subtracting 100 for the fixed deposit because we're only including 100 as an asset there.
Yeah, but remember, you can't show 110 because the asset was worth 100.
Yeah,
Because the 10 is a profit on the sale of that particular, so that profit needs to be shared here. That's the maturing fixed deposit. So whatever the balance is, the balance was 110, that's the 110. Okay, that 10 difference is allocated to the partners because this is seen as a profit on sale. Does it make sense?
yeah, I get what you're saying. I'm just
Okay,
saying that they
yeah,
didn't do that.
and that's exactly how you would do it in a peaceful liquidation. For so for example, even if you had to go look at your textbook and look, or your study guide, and look at some of the examples, when there's a profit, when there's a disparity between the value of the asset, because let's go back to the question. Where is it? Here. The question, what was the balance? The balance was 100, right? Yeah, the
Yeah,
balance was 100.
and then this is
If the balance here was 110, then it's fine. Then I would have put 110 initially. Because have a look at this. Have a look at this. Okay, if this was 110, if I make this 110, okay. Oh, let me not change all of it. I'm just gonna copy paste it again. Let me just show you. Let me show you. Okay, I think let me paste it first. Does it paste it nicely? Is it all correct?
yeah, it all looks fine.
Okay, it's fine. All right, look, if I make this 110, okay, then this would have been 110. This would have been 110. There would have been no profit here, so delete all of that. Okay, there wouldn't have been any allocation. So the fixed deposit would have decreased and the bank would have gone up. Okay, and then the total assets would have been this plus that without the bank. No, see, I still get 255. Even if you do it, even if you do it that way, even if you make this 110, you're still going to get the same thing. I still get 255 here because you still have those two figures.
Yeah.
Yeah, you can query this one as well. I'm going to leave the working as is. I'm going to delete this one because this one's not right. Okay, what we did here is correct. Right, I'm going with the 255. The 255 should be the correct answer because remember, the fixed deposit was sold anyway. So what you have left is only the PP. The PP is the only asset you have left. The debtors is the only asset you have left. Bank was paid out, paid off liabilities and paid out partners. Goodwill was written off. So the only two assets you have left are those two. Those are the only two assets that you have left. Okay, so if you add up those two assets together, you're going to get 255. Where's their working? See, they've left out some columns. They've just grouped assets together, which isn't correct because each asset is separate.
Yeah.
Okay. Yeah, I would query this one as well for more explanation on assets. I would want them to break down the assets further because here we've broken it down further. We've looked at each asset separately and then we've added the assets that are left. Okay, because remember at 7 July, the only asset that you have left is PPE, a little bit of debtors. Everything else would have been closed off.
Yeah. Yeah, I follow.
Okay. All right. So yeah.
Cool.
That's the PPE. Let's go back. Question.
I think that was the last question.
Was that the last one? Yeah. Looks like it. Yes. Okay. All right. Is that all right, Sean? Happy with that?
Yeah. Yeah, that's good. This helped a lot.
All right. You're welcome. Thank you. So I'm going to save this file. Let's save it here quickly. Okay. All right. And then I will send you the piecemeal liquidation additional resource. What I'll do as well is I don't mind sending you these two files. I'll send you the liquidation here, stay unit 4, just some of my own notes here, and I'll send you the ones that I used tonight, and I'll send you stay unit 3. They're quite short. It just gives you a little bit of scope in terms of steps, and some of it's quite useful. So maybe it can benefit you and help you. So I'll send you that. So whatever I use tonight, I'll send to you. Okay.
Thanks so much. Yeah, that'll be great.
All right. Let me save that, and then I'll email it to you afterwards. Okay.
Okay.
All right. Happy.
Fantastic. Yeah, very happy. Thanks.
Awesome. All right then, Sean. You can let me know if I don't know how difficult that third assignment is. I'm sorry, we just didn't have enough time to get through 3 as well. But let me know if you want to go through assignment 3. I do have Wednesdays open, so you can let me know. Maybe you can look at it if you can manage it, because we've actually covered a lot of ground. We've looked at a lot of different sections. I haven't looked at assessment 3, so I'm not too sure what topics are examined in that assessment. But if you feel you do need, even if it's just an hour, we can maybe just use an hour to go through that one. Let's just have a look at how many you got right and wrong. I'm just curious. And then we can see, maybe you don't need the full 2 hours, then maybe an hour is enough. Let's just have a look.
Yeah, it's a lot of like questions on shares.
Where was it? This one. Okay. All right. How did you do? You got 29 out of...
No, we did.
20 out of 29.
We did go... I'm sure we went through assessment 3. I recognize this auditors and directors remuneration.
Yeah.
And
okay.
I think we did. So next week,
awesome.
Wednesday, I actually write the final. I do the final assessment.
Oh, okay,
it's
okay.
Like 3 hours long, but like you said, I mean, we've really covered a lot. So
yeah. So then I'm sure you'll be okay. Then I would just suggest maybe looking at past papers. That normally helps. Try to do those before next week, and then you should be okay for that assessment. What is the last assessment covering? Everything?
Everything, yeah.
Wow.
So
the only thing
that is a lot. The only thing that I'll probably struggle a bit with, but thank goodness we did it, is the statement of cash flows. They just haven't released the results of the assessment yet, which I'm guessing will only come out next week.
Okay.
So I'm still waiting for that. But then I'll obviously use what we did to work through the answers once I get them.
Maybe just a tip. Okay, so when it comes to exams, because obviously the first objective is to pass, so make sure you do all the questions you can do first. Don't try to do the cash flow first and then you get so like demotivated because it's like stressing you out.
Yeah.
Rather get your 50%. Make sure you pass that exam so you don't have to redo this whole course, and then focus on the distinction. The distinction will take some time and effort, but it's difficult to get it because you need to still look at the cash flows, which you said you're a little bit rusty.
Yeah.
Okay.
I'm
Yeah.
feeling okay though based on what we've done. So
Okay.
I'm feeling pretty good. Next
Yeah.
semester I've got management accounting and financial management, and I saw you do have some of those in your. I saw when you
Yeah.
scroll through your subject folder that you do have
Okay,
some of
yeah,
those.
yeah. So so my preference, I don't like the accounting modules. I mainly stick to the modules that I'm passionate about. So any finance module I can cover with you, any investment module I can cover with you. Management accounting, depending on which modules you take, some of those I can also assist you with. Tax I can also do. Um, yeah.
I
So
don't
those are
think I
the
do. I
main
don't think I
modules.
do
Yeah.
tax. Yeah.
Okay.
With economics, I
But yeah,
think it's
let me
management
know.
accounting, and it's yeah. Okay,
Yeah,
cool.
let me know. You can always let me know if you need some help, and then yeah, I do have like videos for certain modules as well, and that also works out a bit more affordable because it covers all the theory for the whole module, and then at least you've got the theory covered, and then if you do need anything additional, that can be worked out separately. Yeah.
Okay, awesome.
Okay.
As soon as I get that sort of the
Okay.
official study guides and whatever, then I'll see what's in there, and then I can reach
Yeah.
out.
I think you'll be quite comfortable with the finance modules because it is a lot of time value of money. The only
Yeah.
theory you just have to bring in the theory, but if you're strong with your time value of money, your DSC 1630, I think you'll find a lot of the subjects quite simple. Yeah.
Okay,
Okay. And
awesome.
you've
Yeah,
you've,
it just
you've got
sometimes
good
helps
marks
to
in these,
hear.
so I take it you are a distinction student.
Yeah, it's
Yeah.
actually only the first accounting is this
Yeah.
1601 that it's not getting over 80,
Okay.
unfortunately. But
Yeah, but
hopefully, I'll
if
try
all
hard
your other
next week.
subjects are 80, that's good, eh? Yeah. I mean, you've done really well so far. And even when we've been doing content, yeah, you know your work, you know your stuff, so that's good. So all the best for next week then.
Thanks, I appreciate it,
Hope it
Anthony.
goes
But I'll
well.
chat to you soon. I'll chat to you as
Okay.
soon as I hear what my other subject lineup's
Okay.
looking like, and I'll drop
All
you a
right.
note letting you know how the test goes.
All right. Good luck for next week. Thanks, Sean. Thanks for everything. Thanks for
Thanks,
letting me
appreciate
help
it.
you.
And
Okay then.
of course, it's been
All
great.
right.
Enjoy your evening.
Thanks, you too. Bye, Sean.